Good Fed Day, Warriors. Yeah, Brand, we go into the trenches today. How's everyone doing? Everyone doing all right? Brand and hi, Mike, Alexander, all you other guys doing okay? Team, you doing okay?
Hey, Dale.
Little weaker dollar this morning, Ryan.
Yeah.
So, with the Fed coming on board here.
Bit of a 180, isn't it?
What's that?
Bit of a 180 again.
Yeah, well, yeah, I shorted it, said it here yesterday. I took half, but I still think there's a good chance that we're going to take out the par level. I think, I think one and done, the market, the dollar's going to sell off on that, and maybe S&Ps recover again on one and done.
I think you might be spot on with the move, irrespective of what the Fed do, even if they're one and not done.
Yeah, maybe it's going to be the ECB that's a catalyst for it to head down here. So we'll see what the RSI structure looks like. It could also hold here. The other side of the coin is I would go long on closes back over 102. So looking at both sides of the trade,
Yeah.
if we don't wash out and we take out yesterday's high, I'd say don't be bearish a dollar. Just my view. What a move in metals yesterday. This is really volatile. It's really volatile. Everything's getting pretty whippy. Look at this gold silver ratio chart. You get this flush and a reversal, then they're taking it down. Metals are getting wild when this stuff starts happening. I mean, look at all the candle ranges you have here compared to what's starting to happen. Range expansion. So
jumpy markets.
Yeah. And S&Ps still high or low, still never took out 4,200. I'd say it'd look pretty bad if we take this out, the 4080 level again. This time it didn't, was not a great signal. It was it was a fake out. But here, I don't think it will be next time. Yesterday was pretty impulsive, wasn't it? I mean, I'm not an elitician. I don't know if Greg is here, but that move that we had, this candle, got here. This was most of the day, and then it fought its way back. Doesn't look great. Anyway, you guys know where I'm at. I'm still, still bearish and in puts and semis and Apple. Apple has earnings, I think, tomorrow.
Yep, it'll be tomorrow. And good morning, guys.
That's going to be that's going to be real important for the market. So, yen, okay. Huh?
I think your Dixie chart has summed up trading the Fed entirely. It doesn't matter what you think the Fed are going to do. You've got two levels you're going to trade, either above 102 or if it moves below that 100, 180 sort of level.
Yeah.
That's all you need. Pick your levels. Don't worry what happens in between. Don't matter what the Fed does. The price is going to move one way or another, and you trade it as you get to it.
This has been, would you view this move in the yen, let's go to Cayman, as a correction in an ongoing uptrend, or is it a failure in the end of the rally type of move that we're getting?
I think Cayman's out today this morning.
Yeah, I'll have to do my best Cayman impression for you.
Okay, B-Man, what do you think? B-Man.
Okay, what's the next letter up? L-Man. I'll be L-Man.
B-Man.
How about the R-Man? R-Man.
Yeah.
All right, okay, go ahead, R-Man.
Yeah, I mean, this one's pretty simple. If you pull it out to a daily, or at least scroll it, zoom it out a little bit, it's marking the longer term range, 127, 138.
right.
That's what I've been watching forever, and we didn't quite get there yesterday, but it looked like it was going to the moon. Then you come in this morning and it looks like it's going in the gutter. Yet again, the market's done a complete 180. Banking worries, global
Right.
growth worries, Fed hike worries, China worries. It seems you every morning you get up and the market's trading the opposite way it was when you went to bed.
Yeah.
Can I mention something regarding that too?
Yeah.
One of the things that and I mentioned this during the week ahead video, which I think is a pretty important factor of the dollar yen. I'm like, look, the yen was a byproduct of or a reaction, if you will, from the Bank of Japan. People had to, cover up positions, reposition for, a fresh outlook of the BOJ, whatever their outlook was. You had to see repositioning of that. But like I said, over the week ahead video on Monday, you're going to see the dollar yen respond more to yields. And if you haven't taken a look at what happened to yields over the course of the last few days, it would tell you exactly why the dollar yen came down. Now, I agree exactly with what Ryan is saying. Growth concerns. Look at crude oil is below 70. Why is that?
Yeah.
Because people are pricing in a recession as we head into next year. How about copper? Copper looks like garbage. Why? Well, because the market's trying to price in the global economy really slowing down in the second half of 2023. So yeah, I agree with you, Ryan. It is a growth story, and the yen is just reasserting itself. The market needed a couple of days to respond to the Bank of Japan. I think you're Michael Brown, who you did your show with on Monday. I think you guys talked about this too, Ryan. But the yen, it is basically reasserting itself and coming back in line after the market had to do a little bit of repricing because it thinks that, whether it's going to be a 18-month technical BOJ review or like what K-Man was saying, even though he's not here to reaffirm this, what he was saying earlier this week, or late last week, that hey, people probably just don't want to be short for the next month before the BOJ does actually start to make a move on their on rates and yield curve control. So the dollar yen just needed a natural couple of days to reverse.
Yeah, but then you've got this is a thing with markets at the moment because you obviously got the US banking stuff which reared its head yesterday again as well. But you see this move here. We're down 135.50. Pretty much 200 pips off the top. You get a strong ISM services today, and suddenly it's a strong ADP, and suddenly the picture flips again, and we're probably back up.
Dale, do you mind if I take the charts here?
No, go ahead.
Okay, I want to.
So you can't look at this move and think, oh right, this is going to 130. I'm going to do this for the Fed because in an hour's time, 2 hours time, we've got great data and we're going the other way again. You cannot just marry a position and think you're going to sit in it for a few days.
Right. You can see the key 135 that we're coming into after the channel resistance. By the way, if you guys hadn't seen this, we did, and this is, something we've been talking about, completed a flag pattern, right? Completed channel resistance, struggled above there, did a little throw over. That's Dale's famous, kind of like Dale's famous barbecue, as Dale's famous roasting here of a market when you get the throw over, right, Dale?
Throwovers make people throw up.
There you go. So you get the little throw up there, and now we're back at that 135.20, and I just covered up some of my dollar yen shorts from yesterday. So whoops, didn't mean to do that.
That looks like a very important level, that 135 on my charts. It's an important level too.
Yeah, and exactly what Ryan just said. A strong ADP number or a strong ISM number a little bit later, and we could be right back up above 136, right, Ryan?
Yep, exactly. ADP, 6 minutes? Get
Yeah,
a
yeah.
300 print there, and we probably would be back above 136.
Yeah, speaking of which, with jobs report, on Friday, we have this ADP data that's coming out in just a few minutes. Let me ask you guys this, because this is a question I asked Richard Matthews of Partis FX yesterday, and Michael Brown of Trader X. Are we? And we can start with, since Ryan, you were just speaking, I'll ask Dale this question first, and then ask Steve and Stelios if those gents are here. Is this going to be the month that we start to see the jobs data roll over, or are we still going to have a strong, U.S. employment picture? Now, remember, ADP is today, not the official non-farm. This is going to be the private sector job. We're expecting 148,000 jobs to be created. Stelios, if you're here, or Dale, if you have an opinion here, let us know. What do you think?
I don't think we're going to have any substantial weakening.
Okay, so you think the number is going to come in line, relatively strong, still creating jobs, nothing to worry about. That's going to be your opinion, right?
It's the last indicator to go.
Mm-hmm. So are we there yet? I mean, is this the month where we start to roll over? And your opinion is not this month.
Not this month.
Okay, all right, good to know. Stelios, if you're here, what are your thoughts?
I am here. Hello. Well, I think it's very difficult to time these things, but the picture and the trend is now for weakening, and we saw this in jolts. We've seen it in other in leading indicators for a while now. We're hearing about layoffs, etc. So I think, will it be this month? I mean, I don't know, but if you ask me to guess, I think that it's going to disappoint, and this is my view for pretty much all U.S. economic data. Obviously, some don't. But the picture has changed already, and it's looking weaker. So if you ask me, I think it's going to come in weaker than expected. I think we may even break below three figures. Two-digit number. I don't know.
So you think? Well, is that today, or is that going to be? Because ADP is like it's private sector. It's not as important as the BLS number that comes out on Friday. But do you think the BLS number Friday we could get a number below 100,000?
Well, I guessed 112, but the fear is that it's going to be weaker than that. So, but let's see. it's difficult to. It's a guess. I mean, come on, it's a guess.
Of course, it's a guess. I'm asking you to guess. How about you, Steve?
I'm guessing, and I think it's going to. be weak.
I'm here. Of course, I'm here.
Sorry, Stelios, I didn't mean to have Steve cut you off, but you're in the middle saying something.
No worries. No. I just said I think it's going to be weak. That's all.
Well, Steve, what do you think? Jobs data, is this the month that we start to see weakness come through?
Every month that passes, the likelihood increases, right? Because I do think that we're headed that way. Now, anything more than that is gambling, right? And that's not what I'm subscribed to.
Do you want to hear? You want to see how confident the market is in today's data and the FOMC today? And by the way, we're going to talk about some FOMC expectations. But do you notice the euro here? This is the upper end of its range. This is the lower end of its range. And we are at the 618 retracement, but we're basically mid-range. You guys hear me say this, every key economic data that comes out, when it's critical, we're basically going to find ourselves mid-range, and we are mid-range right now. And that's exactly when the market's like, okay, I don't know if we're going to test the upper end of the range or the lower end of the range, but we're here. So
the upper end of the range would constitute a 3 drive.
What's that? If we did get to the top of the range, it'd be a 1, 2, and a 3.
Yeah.
And you know what, Dale? And you said we should not be short the dollar, so you got to be a little careful. I mean, the dollar. Let's not mince words here. We're at some pretty key support, right? I mean,
yeah, I know. I'm looking. Remember that washout scenario? Under par, and you have some fib numbers down there. I think that could happen this week.
All right. Well, you know what? It's probably not going to happen in 20 seconds, but let's get instant reaction on this.
It could. Oh my God! I hope it doesn't. I'm kidding.
All right.
You're making me. I'm so nervous. My hair turned gray.
Is that it?
For the first time.
All right,
That's
ADP
almost
data.
fair.
148,000 we're looking
No,
for. Let's
Any
see what we
second
get.
now.
Oh,
Whoa,
296.
Big number.
Wow.
296.
see?
Oh my
See?
It's
God.
all
There you go.
random.
Ryan, you nailed it. Ryan, you nailed it. Ryan.
Dollar yen.
Right.
Where's that trading? Up near 136 again. Flick that switch.
Yeah, I mean, it's like
And
right
that's
back
why
up
I
again.
keep saying that I don't like gambling.
Yeah, no, I mean, it's like boom, data, boom. All right. Well, there it is. Strong data. Let's see what the instant reaction of like the euro.
Buy it.
You're gonna buy
Yeah. What?
I'm sorry, Dale. What were you saying?
Bought it. So yeah, I think these wicks will fail.
You think they're going to
I think was
recede?
fade the
Did we
news.
have? Let's look at the data just really quick. Do we have any revisions? Oh yeah, we got a little downside revision.
Oh.
Not much, but from
People will buy headlines today, sell newspapers tomorrow.
That's a good
That's
saying,
right.
in my
There
opinion.
you go, Dale. I'm with you. All right. Well, we got a little bit of reaction from the market just now. The strong data. So, I mean, if you're sitting there looking at the jobs report, by the way, Ryan just posted on Twitter the for you guys to guess your number for non-farm payroll. Now, let me just show you really quick. Let me
Put the link in the chat here as well.
Oh, okay. Well, let me just grab the damn thing if I can get to it. Let's see if I can get to the tweet here. That's not it. Where is it? Oh, here it is. Okay. So let me see if I can get to this tweet. Anyway, let me I'm trying to pull it up here really quick because I guessed 13,000 and I'm notoriously bad at guessing non-farm payroll. So whatever you do, just guess the opposite of me. So, guess like 213,000, 313,000. You're probably going to be closer to being a winner and being able to jump in the ForexAnalytix community for how many are we giving away, Ryan?
We're giving away 200 prizes.
What? All right.
I love to say that one. Blake always
my God.
He's fired.
Three free months on the ForexAnalytix platform. So 3 lucky winners will win a free month each.
Awesome.
Winner,
Okay.
winner, chicken dinner.
That's right. Big winner chicken dinner. All right. Let's talk about ISM data. I actually think that the ISM services data is going to be the data that really matters today. I think it could be, I don't think it's like a real big supermarket mover today because everybody's going to be looking at the non-farm payroll. I think it's the data that's going to matter the most. In the United States, we live in a services economy. So the services PMI,
Nevertheless, outline numbers like the one we got do tend to move the market.
Sure. We could get a knee-jerk reaction, of course, but the market's going to be waiting for the Fed. So we have the ISM, which is coming out in basically less than 2 hours. Then we have the Fed today. So let's get your opinions on the Fed, and I'll start really quick. I just want to say that as far as the Fed goes, I think the Fed's going to, there's a few words in the statement. They're probably going to be changed. And, what we're going to be looking for, and I think what the market's going to be looking for is to see if the Fed is going to change just some of the words to let us know that they are still keeping the door open for more rate hikes, even though their intention might not be to raise again and just keep it paused. They can't afford to loosen financial conditions. And that comment came from Richard Matthews yesterday when I talked to him and Michael Brown. And I think it's a very important point that, today is going to be really critical for the Fed Chairman Powell. He's got to walk a tightrope because he doesn't want to say, look, we got to keep raising rates, especially if inflation continues to flare up like the RBA did this week. He can't say that, but he also can't say, hey, we're just going to pause and we're going to leave rates here for a while, and we're going to see what happens. Because if he says that, then the stock market rallies, financial conditions start to loosen up again. You see, you'll see, rates go down, and, the market rally, gold will probably spike higher, and those financial conditions will loosen, and it'll just reignite some inflation expectations again. So I think he's going to walk a really, really tight line today. So that those are my views about the FOMC. Ryan, since you were you probably have an opinion here from the Flow Show. What do you think the Fed's going to do today, and what do you think is going to matter, and where should you be looking?
Well, just before I'll comment on that quickly, looking at the ADP details, manufacturing was one of the biggest losses among that gain there. So again, we're seeing that split between services and manufacturing.
That's an ongoing issue for years now, in general, Ryan.
Yeah, but we're seeing swings in the data, and the data's manufacturing has been showing weaker globally.
I mean, in general, if you remember, Trump ran on bringing back manufacturing, so on and so forth, and he didn't manage to do that, obviously, because the problems that have created.
Yeah, I'm just talking about the now, not 3 years ago. I'm talking about the data.
In any case, though, it is a constant problem for the US, the loss of manufacturing jobs.
Yeah. So anyway, that's a standout from there. Financial activities or financial services was the next biggest loser at minus 28,000. So, as I say, there's some wonky numbers in there. So keep an eye on that for the NFP. But back to the Fed, I'm talking about the dollar. I don't see many reasons why the dollar goes meaningfully higher after the Fed, unless they do something super hawkish, like hint that their rates are going to go higher than even the highest ceiling on their dots. I don't think they're going to shut the door on further hikes. They'll hike probably the 25. I don't think they indicate a pause. They'll keep the door open for everything and keep going. But you've got to look and think how much more is in the pipe. We're going to be at 5 to 5.25%. 5.25, 5.50, 5.75 is probably going to be the top according to their own dots. So maybe we've got 2, at most 3 more hikes to go, and the market's going to see that, whatever the Fed says. So I don't see a reason why the dollar goes meaningfully higher. And the pivoters are, as we know, are trying to guess when the cuts are going to come and how steep they're going to be. They're going to get the upper hand in rate expectations, and that's bad news for the dollar.
All right. Well, Dale, you're going to love this. And I want to show you guys something regarding the dollar, to your point, Ryan, as far as the dollar index goes, there's a chart, and this is, here, let's look at the euro. This is the chart that you really got to look at. Look at the weekly chart of the euro. See how we're about at the underside of this trend line? I mean, what happens if the euro breaks, above the one, let's just call it 112 level, because 112.30 or 112.20, depends on what feed you're looking at, is basically the long-term 618 retracement. Excuse me, I'm going to sneeze. Okay, I thought I was going to sneeze. I didn't want to sneeze on you guys, so I didn't. So I'm trying to avoid that. Anyway, really big levels that we're coming into in the euro dollar. So Ryan, you don't think that the dollar goes meaningfully higher from here? Is that correct?
No, I don't think it goes meaningfully lower.
Oh, okay, lower. All right, so would you be looking then to sell the euro near current levels, or maybe the cable near current levels? Do you think these are levels where you really need to be on the short side of those, being long the dollar?
No, not if I'm dollar bearish. I'll be looking to buy the dips if we get one.
Okay. All right. Okay. Fair enough. All right, Ryan, appreciate your input there. What do you, Stelios, what do you think regarding the FOMC today? How's the Fed going to position themselves?
Well, this is what we talked about earlier on the Flow Show. I think that, there are two forces which are putting the Fed into a corner. One is the fact that inflation, yes, it's dropping, but it's still at high levels. So they still need to fight that. The other force is all this bank crisis resurfacing, and there's issues with rates going higher quickly, and they're surfacing now. So they can't really say, look, we're done, one hike today and we're done, because inflation is still high. On the other hand, they can't say, oh, we're going to keep on hiking 3, 4, 5 times until inflation is at target, because they know there's going to be more trouble with the economy in general, and banks are not going to like that. So what they do, I think today they do for 25. I don't think there's any doubt about that. And unfortunately for us traders, they probably leave all options open and be kind of vague, which is what they know how to do. And, talk about market conditions and data dependence. And, we're wary of the situation in regional banks and all that, and be a little bit vague and just leave it at that.
So what do you think happens with bonds here? I mean,
going to your bottom red line towards
you think
3%.
you think we come down here and test this, Dale?
Yeah, and then we go to 480.
Well, all right. Well,
that's a Nostra Pinkert.
The Nostra Pinkert. I like Nostra Pinkert. Tell us when the asteroid, the big one's going to hit us. When's the big one going to hit us? I'm just curious.
When I come out of my little pyramid, I'll Skype you.
All right. Hey, Steve, how do you feel about the Fed? How's the Fed going to position themselves today? And by the way, thank you, Stelios. Appreciate your thoughts there.
A pleasure.
Hey, mate.
Hey.
I think we're near some big developments in the few months ahead, having to do with changes in monetary policy, perhaps even fiscal policy by necessity. I don't necessarily expect something much today from the Fed. I do expect, though, that things are going to be changing within the next 2-3 meetings, right? So no fireworks today, in my opinion, although anything is on the table, right? They might signal some kind of a willingness to get closer to a pause or whatever. I don't think they're going to do anything that's not priced in from the market as well. So I agree with Stelios on that. I mean, unless there is some kind of an emergency, they don't want to be surprising the markets. They want to be playing along with whatever the market is pricing in. We should have a look at the language to get some hints about how they want to guide. But I don't think somebody should be trading off today's FOMC.
All right. You don't think we should be trading off today's FOMC? All right. Well,
we've been in a rather choppy environment for a good reason. Everybody knows that change is coming, but they don't know exactly when, and they don't know exactly the extent of which. And that's why I do think we've been seeing the last couple of weeks this kind of annoying price action, right? And sometimes, you have to openly admit that the best thing you can do is be a little bit more patient. I think that's where we are at the moment.
All right. Well, thanks for your opinions there, Steve. Dale, what are your thoughts about the Fed today as we head into it?
I think that they're going to, go the quarter. Maybe yesterday did change your mind a little bit.
The banking fears. Yeah.
So I'd like them to just say one, and we're going to pause and let the markets, whatever energy they have saved up for that, to do it and get it out of the way. So I think that would be what would take the dollar down to new lows under the par level. So I think that's a possibility, which increased after what's happening with the banks yesterday.
All right. Well, again, I think the biggest thing is if they do that and they even voice any type of concerns with the banking system, it's going to, it's going to send the markets a little bit into disarray. And the reason why I say that is because the Fed knows what we don't know. The Fed's got more information that any of us have. So if they sound concerned at all, it's definitely going to have an effect on.
I agree with that, and that's why I'm kind of skeptical about them voicing their concerns.
Right.
Because them voicing their concerns is going to be a big red flag. It's going to be a big red flag.
The admission, right? Hey guys, a couple things. Just I know Dale, it's your interview time, and so I'm appreciative of our guests being here. I just want to show you a couple things that have emerged in some of the FX cross rates that you should be paying attention to, because they really signal more of a risk off type of environment that we're in. If you look at the Euro Aussie, and let me just put us on a weekly chart here, and then let me match up the S&P. If you look at the Euro Aussie, it is an inverse relationship of the equity markets. And if you see this breakout that we're getting in the Euro Aussie, by the way, we tested the breakout this week. We're sustaining the breakout. That typically will signal a reversal in equities, so just FYI. Then you got the Euro Kiwi, same thing. We're holding upside, which also signals downside. Look at the Euro Kiwi, or pound Kiwi, I'm sorry, overnight. This one's crazy. We bounced right off of channel support. All right. This is another one, Euro pound Aussie also holding gains. When you start to see the commodity currencies really underperform some of the, Eurozone, the European currencies, that's one of those correlations that I don't think you should ignore as we go, as we start to move forward, especially in the seasonal time where you have but typically a more bearish time in the markets. So just something
with the dollar weaker. What's going to happen if the dollar bottoms?
Well, remember the dollar is not and it could, but the dollar is not a one size fits all type of instrument. You're going to see the dollar outperform against commodity currencies. Look, the Aussie's not. I mean, remember the RBA just raised rates unexpectedly, and we are not far from trend lows. That just shows you that the market's very concerned with growth prospects moving forward. And you can obviously see that in crude oil. You can obviously see that in copper. Where's my copper? Wherever my copper chart went. Where the hell did my copper chart go? I know it's down here. Oh, there it is. You can see it in copper. I mean, and it's showing up in currencies too. So remember, the dollar is not a one size fits all shoe. If you're going to play the dollar on the long side, you got to play it selectively. And if you're going to play it on the short side, again, you have to play it selectively. So anyway, I want to say thanks everybody for being here today. Remember, if you want to, you want to be inside a great community, check out the ForexAnalytix community. We're posting charts all day long. What trades we're doing. You can see what I have open in the market right here. I just said while you guys were talking, I shorted the dollar yen at 135.76. That was only about 10 minutes ago. Actually, it was exactly 11 minutes ago. While you guys were talking, I was trading. So I shorted some dollar yen.
You multitasker, you.
I am, I'm a little bit of a junkie. So anyway, thanks everybody for being here. Remember, we have services PMI in about an hour and a half. And then we have the FOMC today. Good luck, everybody, for the ForexAnalytix community. I'll see you in 45 minutes on the Morning Edge. Steve will be there. Stelios will be there. Ryan will be rooting West Ham on, and Dale will be hanging out, drinking some Mai Tais by the pool. All right. Thanks, everybody.
For now, in the year 2525, if man is still alive. Hey, Zach, how are you, buddy? Welcome back to F.A.C.E.
I'm good. Good to be back with you, Dale.
Yeah, so top of mind, let's get right at it. I do want to acknowledge great call on the pullback in the miners to about the 28 level, 27 level before the next rally. That was a nice wave and a great entry area that you called last time, Zach.
Thanks. Yeah, well, we can definitely get to the miners. They're looking for a little bit more consolidation here in that move off of March. Let me actually I'll just jump over to that chart now.
Okay, you want to share the screen? You have to
Yeah,
click
working
the
on
Zoom
that.
button. Okay, buddy.
Um,
How's the world treating you?
Thank God.
Okay.
Thank God. Everything is very good. Had great Passover and good trip out to Las Vegas for the money show. And although
yeah.
very good to be back. I'm not a smoker. If you're not a smoker, like have problems with old cigarette smoke, some of the Vegas hotels are a little bit tough to be in for any period of time.
Yeah.
So let's go to a larger view. I think nope. I have to find which
So you're
yeah,
looking
that was
for,
the right one.
maybe pull back to 2930 to be what
Yeah, I
would you
think
label that?
31 even would be perfectly sufficient. You get some moving average support, middle Bollinger Band. That's the high end of the normal fib zone for that smaller degree. But we're looking at this as a larger primary wave 3, but in a diagonal. So that means instead of the 3 wave getting a regular 5 moves, it gets an ABC, which I think you guys see that kind of bouncing around and rattling around within a trend channel a lot in a lot of the Forex charts that you guys look at. So in one of the things that Garrett and I have really noticed, and it doesn't really look like it's going to be the case because we do have a solid 5 waves up, but we are counting the move off of the September or whatever 2022 lows, because gold and silver made slightly different lows there, but as a larger diagonal. So I'm open to this kind of morphing, even though this looks like 5 waves up for the wave 1. I'm open to this third being an ABC move and maybe a little bit more muted, and then maybe it gets that kind of blow off top 5th wave that stretches up into the 60s and towards the 70s later on down the road. But in the shorter term, would really like to see a little bit more consolidation in that wave 2 inside the third off the March low that started.
Okay.
So that's looking
So
at.
this should be the money wave. Maybe we get from this low, we get some kind of fib extension of the wave from 26 to 37.
Yeah, this from that 31 region, plus or minus about $1 is the ideal. We should head up into the 46, maybe even stretching. If it's a pure impulse, then that could even stretch closer to 48, 49 for just the third of the third. So that's going to be the heart of the move that should have the strongest technicals and the most volume, and really all of the small miners, should really be lighting it up. If they're not, then that brings us into maybe this is that A wave, which should still be pretty strong, but maybe this is an ABC for a larger version of that A, and it's going to come up like that and be a little bit more choppy. So, if that's going to be the distinction between this being a pure impulse, which is what we would like to see, and having an early indication that we maybe need to look for, more attempts at some consolidation. So we'll have some pretty clear levels along the way as we start off of that 31 level that need to hold, and what we should see as far as those waypoints inside.
What would negate the bull case?
I think anywhere starting to get under 28 is a little bit concerning.
All right.
When you zoom out here, as deep as this was, where it counts much better as the wave 2. I don't know if you remember when we were on here before, I kind of wanted, my ideal was, I said, we could count 5 waves up for wave 1, but I would love to hold the 29 region and try for a 5th wave up or a better 5th wave up and then get the wave 2. So technically, in some things, this counts better as a 4th, and this is the 5th of wave 1. So that's 1, 2, 3, 4, 5 waves up for this wave 1 off of the September or October low, whichever individual stock made that low. And so that allows for a little bit more of an ABC retrace back down to the 27 region. But based on the structure that we have off of the April high, we should at least get a pretty decent bounce from this 31 level. So even if it's going to fill out a bigger retrace, if we start slicing through fib support and break under the 30 and 29 level on this next move down, that's a little bit more concerning.
Okay, thank you. Always great to have the line in the sand that changes the count, right?
Absolutely.
Gives you your alternate.
So I was mentioning on gold that we're counting that move off of the 2020 low as a larger diagonal. So that really just means, you know, the wave, all the subwaves, it's still a 5-wave move. It's still a larger primary degree wave 5 heading substantially higher towards the 2500 region. But this first move off of the low counts much better as an ABC. Then we have our wave 2. Then we have 5 waves up that is really past the level that is reliable to be wave 1 of a third, but perfect is in terms of an A wave in the third of a diagonal. So same consolidation that we're looking for, just instead of it being the 1-2 start to the third, in gold futures, it looks like the A-B start to the third of that diagonal. So I'd like to see that fade back down into the 1930s.
That's the breakout level. There was a long-term downtrend line. That's going to be important to hold. Under 1920 kind of negates the breakout.
Agree.
And would open the door for maybe even 1800.
Right. I mean, you know, and right. That's, I think it's a little bit too large at this point. I mean, usually when you get so close to the prior top, that's too big to be wave 1 of a fifth. That would be a really, because also that would be 5 waves up for the wave 5. And so a really extended fifth, which I wouldn't complain about, but it would be a little bit less reliable than holding. So, you know, if you're going to break under the 1930s, then, you know, again, there's some support at 1900. But as you said, that opens the door maybe for a retest of the 1770 region of support, and how it gets down there. If it were going to fail to hold, you know, this region, that's going to be a big warning. So, you know, really, you know, the nice thing when you're looking at things, you know, at the smaller time frames as well as those larger ones. You know, we have a very clear pattern here that's pointing to that support region. Right. If it gets there in a different way, or, you know, it's slicing through that support without getting at least a bigger bounce first before coming down to the 1900 region, then that is a very good warning sign.
So yeah, let the market tell you when you get to these important fib levels, what the reaction is. Do you get a 3-wave bounce off of that, or 5? And sometimes can't just the velocity of the move give you a good clue?
Absolutely. You know? Absolutely. Okay. I mean, we know what the character of different waves in different parts of the pattern should look like. And so, you know, as we were talking about on GDX, you know, if you're expecting the third of a third, which should be the heart of the move, and the technicals aren't supporting it, then you need to start to consider, you know, what else that might be, and just, or be very, very much, you know, you can't be too impatient, because sometimes things take a little bit longer to build up, but you need to at least be very, very acutely aware of those key support levels that need to hold for it to maintain that immediate bullish potential that you're seeing.
Okay.
So we looked at before. Go ahead.
Well, 3 months ago, Zach, you also made a very nice forecast. You said that the S&P would trade up towards 4,300, and be careful because people start getting pretty bullish. So if the Fed gives what the market wants, maybe we could squeeze it there. Same count. Okay.
Yeah, I mean, the only thing that changed, you know, when I was on back in January, we were looking at this as a 1-2 start to a C wave off the December low, and we got the nice third, but then we didn't hold this support here in early February to get a good 5th wave up. Now, I say that, but some things like XLK and SMH did hold as a 4th wave here and got a 5th wave up.
Yeah, the semis have rolled over already.
So, I mean, I could still see some extension. You know, NVIDIA might be trying to extend a little bit and pull the rest of them up, but
it's diverging like crazy. NVIDIA has chlamydia.
And that's actually what Garrett and I spoke about at the Money Show. We were doing a whole thing on sector rotation. And showing how, a lot of those things that we were pounding the table on that had great setups off of the December low for strong strength into the start of the year really look like they've completed this B wave already. And if they get any nominal higher extension, it's just extra bonus, overtime round, and that the market seems pretty close to a top as well. I think we needed to move this B wave over as an expanded running flat for the S&P. The NASDAQ we can look at in a minute, counts a little bit different. Should really try for one more high to really tag that 4260 to 4300 level in the S&P. A measured move is actually all the way up at 4470, and the 4465 levels, the 764. I don't see the subwave pattern that off of either low, whether off of December or off of the March low, as having a high probability of getting all the way up there. I think getting to 4260 would be ideal if we can hold yesterday's low at 4086. Really looks good as an A B inside that fifth. Right. It doesn't really have to be a diagonal, but I think the ES counts a little bit better as three waves up here. So can get this as a big A, little B, and tiny little C wave for that. So just looking for an ABC because it seems to make the most sense. But certainly in distribution mode and not very clearly bullish.
I'm trying to think of what group could carry it, because even the oils look bad, the semis look bad, the banks look bad.
Well, we're only looking for one more low in the energy names, and we think that can get a nice swing up, but that doesn't necessarily mean that the rest of the market is going to do anything similar, because these moved up against the grain before. So we don't really worry about. That's still
pretty far down there from where we are, where you want to buy it.
Yeah, but we are in the heart of earnings season, and so there are a lot of these individual names that could get bigger drops on as kind of fluke drops on earnings, but the rest of the it doesn't really drag on the market so much. But I would love to see just under the 70 region, maybe down to 66s for XLE and a lot of those component names. XOP is very similar.
Where do you think WTI will be for us to get there?
So I track the crude oil futures, CL, and not WTI.
That's fine.
Those look like that has some more room to the downside, even down towards 55.
Okay.
Certainly any move, this is a key resistance level now, this 8360. So any move over that, really have to be wary that this was all, even though there's no clear completed pattern that I can count for this to be a significant bottom. Maybe this is just a muted ABC for that parentheses Y wave, and it didn't get the full extension of the move. But if it's going to hold March and break over the April high, then don't stand in the way.
Okay.
But you're asking where potential strength may come from, and so Garrett and I really like XLU
utilities.
Yeah.
Is that because the bonds look good and the 10-year looks like it could go to 3%?
I don't really do the why so much.
Okay.
I stay away. I just look at the charts. But that's it's a good possibility as far as why. We were looking at studying some graphs of sector rotation. And one of the things that we do notice is that while on big downdrafts in the market, so if we do start that C wave down, it's going to suck everything in eventually. But stuff like XLU and XLP have often been able to hold out just a little bit longer at the top. So XLU is one of the things that we identified back in October is still being able to make a actual higher high from what it did in 2022 and 2021. And that's still the case as long as it's going to hold that March low. I mean, for anything that we're anywhere remotely bullish on, that March low is pretty crucial. So if that breaks, all bets are off and buckle up, because we're probably heading down a lot. But XLP is also pretty similar. That can be looking up If we're heading higher to a new high, it really needs to get some more of a consolidation, unless this is just a very, very
What is
muted
it?
move.
What is XLP?
XLP is the staples, consumer staples.
Staple. All right. So these are both defensive areas.
Right. So we had a really good opportunity for this to turn down, and we were bearish a couple of these names, and they got a little bit of a move off of that ideal resistance, and then stopped out. So there was a really good risk reward setup for some immediate downside, and the fact that it invalidated that potential for immediate downside opens up the door to some more bullish extension. I personally certainly like XLU more.
Better.
Yeah, but for a similar path higher, I think it's a cleaner setup with this 1-2 start to that C wave. But I have my nasty little red triangles, pretty much saying, be careful, because this is not only is it the end of a fifth wave up, but it's a primary degree fifth wave also, and potentially completing that cycle degree C wave.
Do you have a view on Apple?
Yeah,
Zach?
my chart's a little bit messy because
That's okay. I spilled coffee on it.
I think Apple really counts best as this ABC expanded flat off of the June 2022 low. So that was a low that we really wanted to see hold in a lot of things to actually get a higher high. It does not look like Apple's going to be getting that primary fifth wave off of that high, which is why I made that gray. And instead looking at this as an A, B, C for this B wave, but we're into some pretty key resistance here as a 764 retrace and the measured move compared to this A wave off the low. So not a typical structure that I think, and I've chatted about this with my subscribers. What does this
imply? A test of the B where your cursor is down there?
Or even lower. I mean, the measured move wouldn't, because it's already at a 764 retrace and we made a lower low, the measured move would probably only come down to maybe the 120 region if it was only going to get a measured move. But it does imply that either of these could have been a more significant top, and we can just start to plummet from there. In the larger cycle degree or even a super cycle degree correction. I think Microsoft is a little bit cleaner.
It's stronger, but you think that earnings spike might have been it?
Yeah, I mean, it was one of the leaders in terms of like what the XLK did and other technologies, and now it's just getting a little bit further extension. Same B wave here, it's at a 8.6 retrace. But it more clearly counts as this cycle degree third wave top and the AB structure inside that cycle wave 4. So looking for a move down over the coming months to year or more, as soon as it starts to roll over and give us some indication of some impulsive action off of that high.
So that's interesting because, you're talking about the strongest groups, especially Apple. Everyone loves Apple. Even bears say Apple's a good company.
Right.
You know what I mean? So this is a group, MAGA FANG, that's been really carrying the rally.
Right. I mean, XLK is just the tech sector, and it is 22% of it is Microsoft and 22% of it is Apple. And then it's also got some TSM and some NVIDIA and other stuff in there, and like the top 10. And not a lot of other major holdings of other things. So, when you talk about SMH already looks like it topped, XLK easily counts as a top. Maybe it tries to get a little bit of that same extension that Microsoft just did. But again, it's really on borrowed time. It filled out the exact, C wave up into the resistance that we wanted to see off of that December, January lows, and looks like an ABC bounce. So, maybe it tries to continue to meander higher, but the risk skew is certainly not favorable. So I'm
maybe we don't have 4,400 left in this market the way some of the leaders look.
Right.
Are you considering that we may not fulfill that count in the SPX to 40?
No, I mean,
44.
Garrett and I have already, talked about how the leaders could start to fade off, and be less leaderish in the past. Okay. So we look at the QQEW and the RSP, which are the equal weight versions. And again, you know, those had a really good opportunity to turn down impulsively. They did get 5 waves down, but when they could have stopped as 5 waves down and 3 waves up and tanked, they didn't tank, and they got a little bit higher. So that didn't make a higher high yet, but this is only 3 waves down off of that. And so as long as that recent low holds, then there's a good chance that these try for higher in just a more convoluted, complex pattern for the same B wave. Instead of it being a simple ABC up to a 618, it's trying to get a little bit higher than that as maybe a WX and a Y. And that's a Y wave is just a C wave that gets a little bit extra that counts as its own ABC. So,
okay. And what's this ETF consist of?
This is the equal weight of the QQQ.
Equal weight.
Right.
Okay.
So it flattens out, you know, the overweighting of Microsoft and Apple and Amazon and all those guys. And so we look at RSP also, which is the equal weight of the SPY. And again, as long, you know, there is some potential if the April 26th low breaks, as long as the March low holds, but for any possible extension higher, that's pretty key support.
Yeah, last week's low.
And this held a pretty divergent lower high compared to a lot of those other names. So, you know, easily counts as that complete, but you know, when it had that opportunity to stop here and drop hard, it got a little bit extra, and then it held corrective consolidation. So have to give some potential for extension, you know, the benefit of the doubt, as long as that support's going to hold, but just being very mindful of the larger risk skew.
One of our attendees is asking for Amazon if you want to be.
Yeah, we can look at that. I just wanted to pull up, you know, another
emerging markets. Okay.
This one, you know, also very clearly looks like a B wave top. You know, if we're going to force that same purple potential for extension, you know, I put it on the chart just to make some people on our site happy, but we have 5 waves down and 3 waves up to a 618 retrace here, and then a move off the high that isn't clearly corrective. So this is pretty key resistance right here, this 3930s in emerging markets. And certainly if it gets over 4016, then it can head higher in that same extension, maybe at least just trying to retest the 44s, but easily a start to some downside action there.
Yeah, see, almost take you all the way back to the October lows. And you know, that kind of gives me a clue that the dollar could wash one more time, but we're going to have a dollar rally, and that's why EEM might be under pressure. What do you think?
Right. Yeah, I like the dollar for a little bit more of a bounce. This was kind of unsatisfying in terms of a full ABC up, but it did get nominally higher. You can count 5 waves in there, and it got nominally higher than the A wave. So we can count 5 waves down from this bounce that we were looking for. You know, I said last time I was on with you, we had a pretty sharp move down in the dollar that looked like 5 waves. We wanted to see at least a corrective bounce up towards the 106 region. So we got that, and we have another 5 wave move down. So more of a wave 2 would be normal. I'd actually be fine moving this A wave over to here, and you know, maybe it gets a B wave. How about that being
A? How about that being A, and the B wave takes out 1 for an irregular B, and then we go.
Yeah, I mean, if that's gonna, it's certainly a possibility. I think if that's gonna happen, you're not going to get much past the 103 level for the rest of the wave 2. But you know, that's some pretty serious resistance there in the 103. If we get strongly over 103.60, then you know, maybe this is at least heading to this wider flat here.
Yeah.
Yeah.
All right. Well, Zach, gosh, you cover so much ground in 30 minutes, but you know, it's probably not enough for people that are watching you and would like to keep tabs on what you and Garrett do and your whole crew. So if you want to show people or tell people
so
where to get
we have Stockwaves, and we also have a companion service to Stockwaves is the Metals, Miners, and Agriculture service, where we look at all of the precious metals, also some base metals and industrial miners, all the miners, including uranium guys, and a lot of soft commodities. And
do you have a uranium miner you like? There aren't that many, are there?
There are a number that we follow pretty regularly. I think CCJ is a great one. I mean, we're very bullish long term, but we have 5 waves up off the 2020 low, and we do not have anywhere near what looks like a completed wave 2.
Okay.
So, you know,
how about platinum? Do you guys cover any platinum miners? Are there any that you cover?
I think Impala is the only one that really comes to mind as a, and I don't even think they're much of a pure platinum play. I think it's kind of ancillary. It's to a lot of other precious metals miners. I don't know if many that are, I mean, if there might be a couple other micro caps that are focusing just on platinum. But I don't know of many other direct plays, but the platinum chart does look great. Room for some more consolidation into the 1050 to 990 level, but looking at it heading much higher longer term.
Yeah, and that it could narrow the spread between itself and gold.
Right.
I mean, when I was your age, it was trading at a premium, $1,000 premium.
You mentioned that.
Yeah, when I was just a young lad like you.
Right now, isn't palladium is not quite at a premium, and it's heading lower here. But you know that's going to be a good pickup in the 1200s. You know, that looks like a nice completion of 5 waves down and a measured move C wave into support for this larger cycle wave 4. And since this is a diagonal, you know, it could start off as a pretty choppy move. I have to go to a 2-day chart to get
but look to where it could go.
So that's going to probably be an ABC move, and we can set up for looking for some nice symmetry with the A and the B inside the 4th. So you can get an A and the B there. That might be cup and handle or an inverse head and shoulders or something that some of you guys might be looking for. But you know, certainly off of this 1200 region is good risk reward for the start of a move up.
Okay, Zach. Excellent review. Once again, Laura's thanking you. People are thanking you for sharing, being generous with showing your counts and the structure you see. Thank you, my trading warrior brother. Appreciate it.
My pleasure. Good to be on as always. Take care, Dale.
L'chaim, Zach.
L'chaim.
All right, so that's follow Zach on Twitter at Zach Manis, and the website address one more time, Zach,
is Elliot with 2 T's, wavetrader.net. If you go to my Twitter, there's a link there to Stockwaves.
Okay, at Zach Manis. People are thanking you. I thank you, Zach, and root for you. Have a great spring in the markets, and we'll talk this summer, bro.
Amen. Take care.
Okay, take it easy.
Bye-bye.
So that's a wrap, everyone. Don't just count your pips, count your blessings, and team is waiting for you in 13 minutes. Have a great day. Say it back at you, Sinatra.